With a 2.5 to 3 week consolidation phase coming to the end, the next move is just around the corner. We're going to be discussing the macro charts for Bitcoin today, taking a look at potential drawbacks and again potential reversal points in the trend, as well as the short-term price action. Let's go ahead and jump into today's video. Okay guys, welcome back to the channel. Thank you for tuning into today's video. We're going to go ahead and do a shorter video today focusing on only 2 points. These are macro reversal points of Bitcoin, and number 2, how low can Bitcoin realistically go according to the structural data, according to the technical data, and more importantly, at what price point on the way down will Bitcoin break long-standing historical macro data? Put simply, at what point is the downtrend going to become irreversible, or again, very difficult to reverse? Let's go ahead and jump into today's video. Before you do, smash the like button, hit the comment button, and subscribe to the channel. We do daily Bitcoin analysis and technical analysis, focusing on data, the objective facts, and the structure itself. You can also join our Telegram channel, which is the second link in the pinned comment down below. Get access to all our charts, analysis, information, videos, and more. Again, we haven't been posting here much because I am on a little bit of a break at the moment. I come back on the 1st of January. We'll get all the VIP and a Telegram channel up and running again. If you're interested in joining the VIP for 2023, go ahead and join this channel here. Again, the second link in the pinned comment down below. We do have a sale starting on the 29th of December. You can find all the relevant information within these 2 links. Let's go ahead and jump into today's video. So, macro reversals for Bitcoin. We've talked about this in a lot more detail over the last weeks. We're going to talk about it again today. So what are we looking for from a structural standpoint? As you can see, we have 2 structures developed on the macro. We have a macro descending channel, okay, confirmed by the fact that we have 3 points of retest on the top side and 2 points of retest on the bottom side, which equals a 5 retests in total. This is the minimum amount of retests of our trend lines we need to see a confirmation and validation that this descending channel is in fact a descending channel. So we can confirm that, we can be quite confident in the assessment that this is a descending channel and that this descending channel actually represents the entirety of the bear market. As you would notice currently, the price action has actually moved outside of this descending channel. So technically the price action is without or outside of the bounds of the descending trend line, this bear market resistance. However, we have developed a falling wedge structure within and out of the descending channel, meaning that the price action will not reverse this descending channel structure until the downward descending trend line of this falling wedge, which developed within the descending channel, breaks towards the upside. That will actually occur at the POC level on the VRPV. You can see, which is around $19,000. $19,000 as well is the largest historical singular horizontal resistance we have on the Bitcoin chart for over, we're talking 3, 4, 5 years. If you go ahead and take a look at that level, it's a massive resistance. So we do want to be keeping an eye on that. You can see how large that resistance is in here. Moving to a smaller time frame, particularly the price action right now, you can see we are developing quite a strong horizontal consolidation around this $16,800 to $17,000 level. This is a particularly important zone, as the directional move from the current consolidation is going to determine whether or not we go up and retest the downward trending resistance, which will facilitate a breakout, or whether we go back toward that downside, that horizontal support zone we've developed at around 15,500 and potentially crash to a even lower low. Going to the smaller time frame really quickly, let's go ahead and show you what this looks like in terms of our horizontal ranges. So the red zone over here represents that June to November bottom. This is the level we do need to break upwards to facilitate a retest and break out of that downward trending structure we have just been discussing on the channel just about 2 minutes ago. Okay, that is that structure we need to break out. As you can see, $19,000 is sitting around about that level towards that end part of that descending trend line. And again, as time goes along, this trend line will be pushing lower and lower and lower into that June and November range. At this point, it will become quite a strong resistance. So to the downside, as you can see our horizontal levels, losing that current range we just talked about, that POC on the larger time frame, I'm going to show you one more time, the 16,800 to 17,000 level, which we are currently sitting just briefly above, represented by this gray horizontal zone. If we do lose this, this will validate or enable, facilitate, whatever you want to say, that next leg towards the downside. I do not believe if we come back down to this level, we are going to be retesting this zone. I do believe we will fall right through it towards new lows. So this current consolidation between these two gray boxes is incredibly important. It's going to facilitate that move towards the upside and potentially that retest of that downward trending resistance, which again will facilitate a macro reversal or is going to result in a heavy rejection back towards new lows. So what do new lows look like? What does a macro reversal look like? So now that we've talked about what will facilitate those two things occurring, let's talk about what these two things actually are and where the price can go from these two levels. So again, a macro reversal, we need a few things to occur. Number one, we're looking for a break out of the macro descending trend line that we've developed on this falling wedge structure. Number two, we're looking for a breakout of the POC level on the VRPV sitting around 19,200. And number three, the 50 SMA on the VRPV. And that will consequently break if we do retest those prior to, and therefore we're not too worried about that right now. That will now, however, act as a potential rejection point. So looking for those two key indicators. And finally, we are looking at the weekly RSI. I'll go to the weekly chart. The weekly RSI to give us some kind of insight on when and how fast this move could potentially occur. We're looking at that downward trending resistance on the RSI over here, looking for a breakout of that RSI to give us some sort of indication on where this price action is going to be going and where the momentum is telling us. Looking at it from a structural standpoint, I do want to point out that we do have some very bearish candles printing. Of course, we did have quite a strong rejection from this June to November low, represented by quite a bearish, this red candle, quite a bearish candle over here, indicating a pretty strong rejection and continuation into this downtrend. And therefore, we definitely do have this selling pressure, this downtrending pressure, but we are still in a downtrend moving forward. Therefore, the probability that the short term does, however, actually execute this downward move is a little bit more likely, I would say, than we do expect any sort of move to the upside. However, the benefit of this scenario is that no matter which way the price goes, you really are not missing out on much because the current consolidation zone is only a 1.5% range, meaning that if you do expect the price to move down and you are waiting for a price to move down and then it moves up, you're not even missing out on a 1% gain before you can flip your bias and look for upside longs. And vice versa, if you do expect the price to go upside here, you're not even missing out on a 1% gain towards the downside before you can flip that bias and look for shorts to the downside. So there are benefits of tight consolidations. It allows quick and easy adjustments of positions with minimal losses. However, these long consolidation zones can be quite boring for trading and again can chop you out pretty badly if you are jumping preemptively into any swing trade. So definitely keep an eye on that, guys. For the downside, let's talk about where Bitcoin can theoretically go. Looking for an honest, reliable, and accurate exchange that you can trust to trade on, go ahead and sign up to BitGet with the link down below and join myself and all of our other VIP members and other members who trade on BitGet daily. There's a whole range of benefits and features you can actually get by trading on BitGet. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC, 0% trading fees on spot, massively reduced trading fees on futures, is one of the lowest in the game. And most importantly, access to their protection fund in case the exchange gets hacked, you can actually get reimbursed for your funds so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to a reward center where you can get up to $4,163 in rewards and access to the Mega Whale exclusive referral link bonus discounts. Every other month, we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video. So according to the 4-year cycle, Bitcoin could potentially see a 84% drawdown, and that's going to take Bitcoin down to about $10,000. And $10,000 is a number I want to talk about in just a moment, but we'll come back to that because, again, this is nothing more than a model. According to the actual data we have, the structural data and the volume, the historical trading data, we can see that the next projected target for Bitcoin, if this downward trend continues, would theoretically be between this July 2019 high and the September-August 2020 high, which takes us to $13,000 to $12,000. Now, yes, Bitcoin could potentially go lower than this, but I would argue that this is an incredibly strong support range and going to be a very difficult range to break below. And if we do start breaking below it, we have absolutely enormous amount of volume historical trading data below this $12,000 range. It's going to be incredibly hard, and it will take a very long time for the Bitcoin price action to fall from 12,000 below anything under $6,000. So I know a lot of people are expecting to go to 4,000, 3,000, but I do want you to be aware that if we do reach this $13,000 to $12,000 range, the direction from 12,000 to under 6,000 will take a very long time for that price to push through. Not only will that break the 4-year cycle, but again, it's going to break a lot of macro data in terms of historical trading volume that we do have. As of right now, as of the data available, the next major support is this area between $13,000 to $12,000, as you can see represented by a slight increase in our VRPV, and just immediately below it a massive increase in that VRPV, indicating a strong support sitting at 12,000. It would take a lot, it would take a lot to push the price down below 12,000. We're talking a cataclysmic crash in the market, facilitated by a massive exchange collapsing, a massive fund going under, more economic recession. It would take a lot to push the Bitcoin price under $12,000. So it's not something that you should be sitting here saying, I want 4,000, I want 5,000, I'm waiting for that. Because as of right now, we have probably one of the strongest historical supports Bitcoin has ever had in the history of Bitcoin, sitting between $13,000 and $12,000. For you to sit here and say, yes, it's going to $4,000 before we've even retested that zone, you're thinking too far ahead. You're counting your chickens before they hatch. You're blinding yourself to a potential reversal that will occur before that target is even met. It's exactly the same mindset the people had who expected 100k Bitcoin. Everyone was saying 100k Bitcoin. I was saying we're not going past 70k. It's exactly the same mindset as the people calling for 400k, 300k. You're counting your chickens before they hatch. You're looking at targets that shouldn't even be looked at before we break through these critical levels. So the next downside target is 13 to 12k in my opinion. Now, if we do push below $10,000, represented by a 4-year cycle, the 4-year cycle will officially break. I believe the 4-year cycle will break past $10,000, and we can see that continuation towards the downside. But again, for us to see a break towards $10,000 will take something so horrific in the market that downward price action be nothing but expected at that point. I'm going to leave the video here, guys. If you enjoyed the video, smash the like button, hit the comment button, and obviously subscribe to the channel. And if you do have any suggestions on the next video, because we are running out of things to say, really, the market is getting quite boring, particularly if it's long consolidation, let me know in the pinned comments or just the comments down below what you want to see next video. If you want to see an altcoin, if you want to see Ethereum, I'll chuck it into the end of the Bitcoin video tomorrow if you do have any suggestions. Cheers, and I'll see you tomorrow.